The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Pleased to have with us Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, always great to catch up with you, sir. Thanks for making time to join us here today.
Yes, sir. My pleasure, Jesse. I wish I had a little better news in the grain complex for producers, but on the flip side of that, a little better opportunity for end users to get things bought up before spring and summer weather.
Very, very true. Well, as we look at that market trade, really the last couple of days, we had that big move on Monday to start the week, and then it's just kind of been downhill from there. More risk off momentum through the trade. Really feels like just the recessionary fears and some demand destruction worries kind of climbing their way into this grain and oilseed market, especially here as we work through the week. And it's kind of seems like it's outweighing supply and demand fundamentals, Bryan.
It is and it isn't. So on the surface, if you look at today's export sales number, particularly in corn, a big disappointment. It's a couple weeks in a row, and the hope was that we're starting to see end users really, drill into this market, especially with China buying in recent weeks. But that wasn't the case. So you have that as a negative. But if you look at yesterday and today, you bet you kind of look across the board and you're looking for, a source of what's pushing the market, what's driving things downward, and there really wasn't any one thing. You could argue, yes, Poland opened its border. It looks like they'll put some grain from Ukraine through Poland. That's not really a new negative. That's just a shifting of supply a little bit. Perhaps the wheat market wanted to view the potential rain for the western southern plains as beneficial to crops. So we'll give we'll give credit to that. But boy, beyond that, you look at your 6 to 10 day forecast, cool and wet, not going to be an early start for a lot of farmers. In fact, the guys in the Dakotas, Minnesota, northern Wisconsin, they're getting really concerned that this is going to be dragged out deep into May before they get, at least the first week of May, before they get really good field work accomplished.
I know you mentioned as well. I want to focus just on the old crop here for a second, and both, especially in quarter beans. I know you mentioned end users being able to get a little bit of maybe some of these tight old crop supplies. I know we've been watching the May, July calendar spreads. We're going to go into delivery here just very soon in front of us here, a couple of days. What's your take on how these old crop contracts are holding up right now, and some of that end user activity possibly out there in both corn and soybeans, Bryan?
You bet. So you've got limited supplies on hand, and that's keeping the May has been holding bull premiums. That means the May contract is higher than July, and deferred months. The reason the deferred months are down is because of the expectation for Southern Hemisphere crops to be more readily available, both soybeans in the near term and corn by late June, July. With that being said, what we continue to hear from our buyers and some people who look big picture what they need for supplies is that ethanol maybe booking enough right now to meet the near-term demand. But Jesse, I got to argue that as we get into that midsummer and beyond, things no, the export market doesn't pick up and remain sluggish. Well, at some point, the USDA may reduce the exports and then therefore increase. I got to tell you, if I'm an end user, I'm getting ready to jump on this. I don't think we're going to get a lot cheaper in the very near term, even though we were down this week. Remember, we were up at the end of last week, and we saw a 30-cent rally in May corn on Thursday, Friday, and Monday, and now we've taken some off here at mid to late week.
Well, thinking as well, I mean, farmers, if they have old crop supplies, obviously end users trying to pry it out of their hands here. As far as new crop, though, I look at $5.50-ish December corn, looking at $13 November beans here after the close on Thursday. Should farmers be thinking about, I know it's a busy time of year, but they have a little bit of a lull this week in many areas. Should they be looking at their marketing plan and looking at some sort of protection? Should they be holding? I mean, what are some thoughts that you have that you could share there, Bryan?
Sure. So let me give you a kind of a big picture perspective. If I'm a farmer, or if you have farmers that are listening that have no sales on the books, I want to make the argument that by fall, $5.50 corn, $13 November beans may look like a good price. So let's get started. Here's my rationale on this. If you wait for a rally in the market and it comes, you're likely to sell some. Let's say we can sell some $6 December corn and we can sell some $14 beans. Market tips over and starts heading down. You're willing to likely sell more because you'll have confidence that your crop is there, and you're probably likely to sell where prices are today, assuming you're going to have production, and you have a good chance that you'll be able to look out your back window somewhere down the road and go, yep, I've got production I can sell. I better sell. I think you got to get a little bolder than that and say, look, I'm a farmer. I am going to have production regardless. I have insurance for it otherwise. So I think we get more aggressive here in the spring. The market is missing an opportunity to rally, and when it misses those rallies, you only get so many chances, and eventually the bears take over. I'm a little bit concerned on the big picture that if there's not enough of a weather disruption, that the managed money, which has been signaling for a long time it wants to be heavy short wheat, is going to continue to go into the corn and soybean markets and be defensive on those in one scenario. So if you've got nothing done, get started. 30 to 50% category, I would just be patient now. Wait for that bounce. Look to buy puts if you're concerned, but I wouldn't oversell my cash market yet. I wouldn't get over my skis on too many, either forward contracts or hedged arrives.
Well, and I know you mentioned the wheat market a little bit too as we were talking here so far, and obviously that KC wheat pressure with the rains moving in, but wheat in general, just, I think we've seen this before when we have some outside fears and market pressure from, energies, stocks, etc., Wall Street recessionary fears, the dollar, whatnot, all that could kind of play into this wheat market, and just feels like it's a downward moving market. It looked like, especially in KC wheat on Monday, it looked like we had a bit of a breakout, but that kind of turned into a fake out, so to speak, as this week has gone on, Bryan.
Well, technically it has. Pretty rough last couple of sessions here. Bullish traders will continue to argue that when you look at the crop ratings, the worst in 30 years, when you look at something like Russia, 92 million metric tons last year. Most prognosticators are talking about 82 to 85 million metric tons drawdown there. The war in Ukraine continues to rage on. We don't know if this corridor is going to stay open. There's a lot of things that could quickly turn the market around. However, we're getting late enough in the season that, for instance, that Kansas City wheat, Chicago wheat, if you're behind on the sales, again, don't hesitate to sell into it. Understand your marketing tools, understand your conversations with your advisor, that you're only a phone call away from owning it if you want. And in fact, it might be more of a situation now where, since we're moving toward the end of April, we think of selling and defending. That is, selling the cash, reinvesting some of that into strategies like call options or bull call spreads. So you're prepared for the market to recover and rally, and you want to get yourself positioned to have more confidence to forward sell more into the rally. But a big picture perspective, it's easy to make a bull argument, especially coming off a bull year last year. But right now, the bears are still in charge, and I think they kind of sent that warning shot across the bow here the last couple of days.
Bryan, over in the cattle market, we saw early pressure. We ended up the day with some green on the screen there. I'd say that was a positive out of everything else we saw. I know we have a cattle on feed report Friday afternoon after the close. Have to think maybe traders squaring up a little bit ahead of that report on Thursday's action.
Right. The biggest detriment to the cattle market is not the cattle market. It's whether or not demand can hold through, and whether or not we're going into just more of a recessionary concern or another interest rate rising environment. We saw inflation a little bit higher than anticipated in Europe, and basically the wording from the Federal Reserve seems to be, in my interpretation, that we have another at least a quarter, if not a 0.5% rate hike coming here. So we're not out of the woods yet with the idea that inflation, higher interest rates, cattle prices at all-time new high levels could quickly come under some pressure. There again, I would treat that market the year when prices peak. So look at things like put options where you leave your top side open, but get a floor established. What goes up can come down, and sometimes it's violent, down faster than it goes up.
Hog market, more pressure there. I have to think at this point that May contract is working its way rather quickly down to cash index levels down around that $71 mark. Just doesn't seem like we can find any sort of support, long-term support anyway, in this hog market, Bryan.
It's really a sad story that when you have beef prices where they are, we can't get the pork market to find some sort of avenue. But I think the big macro picture is, look, China's concerned about African swine fever. You're seeing an increase in slaughter in that part of the world as they sort of curb around their production based on over inventory in areas and the fear that if they don't move hogs and the disease hits, then they've got nothing. So in the short term, more supply. Perceptively more supply doesn't help the marketplace. That circles me back to the cattle complex, that pork is a cheap product, and if retailers feel like they're stocked up enough on beef, I think we need to be very careful in the beef market. It's easy to be bullish, but that there's a market that could quickly lose 5, 10, 15% because it can. And it can because the demand has to hold up with these higher price levels.
Bryan, great thoughts as always, and I appreciate you making the time. Before we let you go, any other final thoughts or anything else you want to reiterate for folks here today?
Well, as I said last week, it's that time of the year now with rain and weather. The farmers are going to get pushed back and be working longer hours when they do hit it. So again, encouragement to be safe, slow down a little bit, things will get done. Second thing is, as you said, it's been rainy, wet conditions. Dust off that marketing strategy, dust off that phone, call your advisor, talk to people who can help you, set some strategy and goals in place.
Well, and I know if folks want to reach out to you and the team there at Total Farm Marketing, they could do so. 800-334-9779 or TotalFarmMarketing.com is another great way to get in touch as well. Bryan Doherty with Total Farm Marketing, always a pleasure, sir. Thank you for joining us this week, and we will talk to you next week.
Thank you, Jesse. My pleasure.